So in this video, I want to talk to you about accounting and bookkeeping, especially for e-commerce sellers. I'm going to talk to you from the basics to the advanced level. The reason I said from the basic to advanced level, because I'm going to cover the questions like either limited company is good or either being a sole trader is good. And to the advanced level, how you can actually save money on your taxes and you can automate all the process. Obviously, I'm not an accountant, and when it comes to dealing with HMRC, doing accounting and bookkeeping, you shouldn't be listening to somebody over the internet like me. So that's why I have a Hussain here from Osome, and I will like to welcome Hussain. Let me bring the Hussain on the screen so we can know all about accounting and bookkeeping. So Hussain, good to have you in our video today. Can you tell us a little bit about yourself?
Yeah, thank you for having me, Zain. So my name's Hussain. I work for Osome. So we mainly deal with e-commerce accounting. We specialize in that area, and I've been doing it for about 5-6 years now. So I have a lot of knowledge of e-commerce accounting, and happy to help you guys with any of your questions and help you understand a little bit more.
Oh, thank you so much for taking time. Osome is market-leading accounting and bookkeeping solution, specially designed for e-commerce sellers. So Hussain is from Osome. Hussain, I want to ask you couple of basic questions and couple of advanced questions as well. So we want to kind of cover the way where people can understand what their tax responsibilities are, how they can actually set up the business, and how they can save money on the taxes, and what these tax and bookkeeping and VAT responsibilities are at the end of the day for online sellers like eBay and Amazon. So the first question I will ask you, which is a very basic one, is like, what is actually bookkeeping? What is accounting? Why do we need to do it? Is it a legal requirement?
So bookkeeping is very important for you to understand yourself, how you're doing with your sales, if you're making money, if it's working for you. For limited companies is a legal requirement. So limited companies will have to produce accounts and submit accounts with HMRC. With sole traders, they don't really need to buy. It's very good for them to understand how their sales are doing, how much money they have flowing in, how much profits they could be making. Keeping bookkeeping and having bookkeeping done it's essential. It's essential for account for your business and seeing how it's running.
For most of the businesses is trying to understand how much money they're going to make at the end of the day, where they are spending most of their money. I think it's really, really important for any business, not just the e-commerce business at the end of the day. And obviously, as you mentioned, it's also a legal requirement to keep the record of each and everything as well. So that's great. So if somebody who want to, let's say, start selling on eBay or Amazon, or somebody who is setting up a business, what would be like a first course of action? Would they better off going for a sole trader option, or would they better off going for a limited company option? What is the kind of difference between them?
Both are, you choose either one, but there's pros and cons of both of the routes. So if you are not really thinking about making a brand and you just want to start selling just immediately, or you want to keep it small, so it's like a side hustle for you, you could just carry on as a sole trader, and if you have another job, you could just add your income to that and then just submit your account. So it's really easy if you're a sole trader to start selling or start your side hustle. But with a limited company, there's a little bit more that you need to do. So like you have to submit accounts every year. There's a little bit more admin, there's a little bit more costs. So sole traders is possible, but it's only recommended if you're very, very small. But limited companies is basically the way to go if you want to build a brand. So the limited company, you own shares of the company, so the company is a separate entity. Whereas with a sole trader, you are the company. So if you make losses, then the debtors can come to you to take money from you. So it's a lot more risk when you're a sole trader, and it's always better to not have that risk and be a limited company, own the limited company and run the limited company. It depends. Some people may prefer to be a sole trader if they're very small. But if you want to grow and if you want to make a brand, if you probably want to sell in the future, you should always consider being a limited company.
I was testing a product today, which is just literally sitting here. and this is the product which we was going to, like, I'm testing it at this point. What it does, like, you can charge like your Apple Watch and your AirPods, and you can charge your phone at the same time. And before I left the room, before we was planning to have this conversation, I left this one right here, and once I picked it up, it was really, really hot. And I just want to talk to my supplier in China again. Like, I don't want these things to kind of damage, people phone or AirPods or their watches as well. So if I was a limited company, then obviously that liabilities are not on myself. If something, let's say, catch on a fire at the end of the day, or if I take a credit or loan from a bank, then obviously the limited company is considered normally as a separate entity. So it's really good that you mention your point there at the same time. So as someone who is a sole trader, or someone who is a limited company, how normally the tax is calculated? So the question is, like, how much tax we will have to pay at the end of the day? If you can just mention both for limited company and for the sole trader as well.
So for limited company, the tax that you will pay corporation tax after all of your expenses have been deducted from your sales. So there's corporation tax to pay, and after the corporation tax, that's when you take your dividends. If you want to take any dividends, we can always leave the money in the company and let the business grow. With sole trader, basically everything's yours, so all the money is yours. So the money that you're earning, it's counted towards your personal allowance. So all the funds that you generate will be yours to keep. So it's like, without having to take dividends, you're already getting everything from the time the sale takes place. So everything is yours basically. But yeah, so some people might prefer it that way. So look, small companies or people that like I know loads of taxi drivers that are sole traders, or if you're a plumber, if you have these sort of trades, you would probably want to be a sole trader to get all the money straight away. So it's basically your income.
Just let's put some kind of example there. So let's say I'm a person who is a sole trader. I made £50,000 in terms of revenue within one financial year. Let's say that. So financial year normally in obviously accounting and HMRC language is something which starts from 6th of April up until next year, 5th of April. So financial year 2022 and 2023 started from 6th of April, and it's going to finish on the 5th of April 2023. Let's say the £50,000 is the total revenue. So from the total revenue, obviously we need to deduct our expenses, we need to deduct our personal allowance, we need to deduct our those type of things. And then let's say £50,000 is your total revenue, and you deduct that personal allowance, and then you deduct the expenses, and then whatever the money you will have left, that where you will apply your 20% income tax rate and then the national insurance number rate. Does that right? That's how it's worked for the sole trader.
That's correct. Yeah, that is correct. That's correct for sole traders. So that is how it's going to work. So you deduct all the expenses, then your personal allowance will be deducted, and then you will be taxed on the remainder of that.
And for the limited company, let's talk about limited company. So limited company doesn't have anything like a personal allowance. It's always, you have a 50,000 and then you have 19%, which is like as you said, it changes every year. 19% is like a corporation tax for the limited company. So after you apply 19%, as a person who own a limited company, I can't take money out of a limited company. So there will be probably two ways to take it out. Either I will be able to pay myself a salary, which again on that I will pay income tax, which will be 20%, and then national insurance, whatever the percentage is nowadays, 9%. Or the second option that you mentioned is paying in the terms of dividends to yourself. And how much is normally the tax in the terms of dividends?
So dividends up to £2,000 is free, so you can take dividends without being taxed. But after your corporation tax, the profits there, you could take. If you want to take more than £2,000, you will be taxed at your bracket. So it depends what your personal allowance is. So it depends if you're a higher taxpayer or low taxpayer, how much you would pay on that dividends that you're taking out.
Yeah. And a lot of time, like I often search for this one, and a lot of people ask me this one. As an accountant, what do you think is the best way, as someone who have a limited company, what would be more like a optimum way for them to take the money out of a limited company, like in the terms of paying salary and the dividends? How much you normally kind of like, not exact figure, but if you can just give us a little bit picture to kind of make most out of your limited company?
So yeah, so the best way forward is what we always suggest is you pay yourself a salary. Pay yourself a salary up to, I think it's £8,632. So
Yeah.
you do not pay any national insurance, and you do not pay any tax on that payment. So you will take that as a yearly salary, take over 12 months. So you get that money back, and then you would also take dividends. You definitely should take that. If you do have money in the business, do take that £2,000 in dividend that you could take tax free from the company.
Some scenarios, like a lot of people who watch this channel and a lot of people who will be probably watching this video right now, their kind of employment structure is around, they have a full-time job where they are working full-time, and then they obviously doing this as a part-time, selling it on eBay or Amazon. And how the tax will work for them?
So if they're doing it as a sole trader, the way it would work is they'll have to file their accounts at the tax year end. So what they would do then is they would add on their salary onto that. So they would basically have to combine all of their income, and
Yeah.
then they will pay the final tax, deducting whatever tax they would have paid with their employee already.
And for someone who want to register a limited company on a side, how it will, like how the tax will calculate it for them?
So they will still have to file the tax return. They will file a tax. So we file directors' tax returns showing how much they have earned. So it will be all the dividends they earned from their limited company, and then it will be all of the income that they made from their PAYE job. So all of their income, again, we would have to file a tax return for that at the year end, at the financial year end.
Just tell us about yourself, how, and about Osome, like if the people need to find you or find Osome, where they can go and find it.
So Osome is basically it's a accounting. It's we say it's the future of accounting. So it's one place where you can have everything. So you can log into one section where you can chat with us. So you will chat to your expert accountant who is knowledgeable. So they are e-commerce experts. So you could talk to, ask any question that you like, and then we will come back to you with any advice. On there, you could see your accounts, you could see your reports. So you could see every single month. You could download your management report where you can see how much money you're making, see how your cash flow is doing, see how profitable you have been. So it's all there. Plus, the requirement is HMRC require you to keep your documents, and we have a portal there where you could save all your files, and we will keep it there for you, so you could come back anytime and see all your files there. So it's an all-in-one package. It's online, accessible to everyone.
Obviously, the link for Osome is inside the description. And we will probably try to arrange this somewhere next time if you will be free as well. So thank you so much.
Thank you so much, Zain.